calling in. Appreciate your time. Thank you.
Thank you so much. Thank you so much.
Okay, that's Nikhil Gandhi at P-Power. Advanced stages of talks, and we could see something pretty soon. That's P-Power Shipyard. Here.
All right, let's get back to the broader market picture. We've got about a 1% cut on the markets right now, but generally speaking, markets looking fairly tentative, as we've been talking about in the course of the morning as well. With us is Tarun Kataria. He is CEO at Religare Capital Markets. Tarun, good morning. Thanks so much for joining us. Appreciate you taking the time. Let me just start with your basic thoughts on the markets. The general sentiment seems to be a bit down and out, more risk to the downside than the upside, even in terms of sort of the fundamental factors. Most of them perhaps support a downside move rather than upside move. Would you tend to agree?
Yeah, I think we've been saying this for a while. I think if you see sort of 52, 5,300 on the Nifty and maybe 16,500, 17,000 on the Sensex, really shouldn't surprise anybody. I think we've all talked about it ad nauseum. The headwinds, not only in the US but certainly in India, would suggest that there are almost no catalysts to take the market materially higher over the next 3, 4, 5 months. So I think the risk clearly is on the downside, and maybe today is a little bit of that. We're seeing some of that.
Tarun, we were just talking about the global markets. I'm not sure if we picked this up right, but you're talking about liquidity globally, and there's one comment which has been picked up from you saying that liquidity globally would remain high. Is that what you anticipate, or won't it be contrary if you start to see quantitative easing at the end of next month, and then eventually rates go higher? Shouldn't liquidity be on a squeeze?
No, I think there are two parts to this, right? I guess there's talk of QE3, which I don't think happens. There's talk of QE2 remaining, i.e. you don't take liquidity out of the system and you don't pump more into the system. I come out with the view that actually they leave that liquidity in the system, but perhaps they take the Fed funds rate higher just to make sure that bubbles are not being created around the world. Because as we see right now, money pretty much everywhere in the G3 world is essentially free, and that will create bubbles over time. So my own view is liquidity remains in the US, rates go up just to prevent excessive bubbles being created globally. So I think what that means to the emerging markets, what that means to India is that money is available to come into India, to come into the other emerging markets, subject to seeing perhaps inflation peaking, because that is a concern pretty much everywhere, that inflation is really what's taking the FII universe back into the US, out of emerging markets. If they see emerging inflation in India certainly peaking in September, October as we do, I think you'll see that liquidity flow back into India.
Tarun, good morning. Prashant here. You're a good guy to ask this, so let me put that question to you. What's the sentiment like amongst for Indian equities amongst foreign institutional investors that you interact with? For a long time we've been hearing that it's pretty much at an all-time low, from different people that we speak to. How would you describe it at this point?
I think generally it is probably as poor as it's been for a while, and we've always talked about sort of the macro picture not looking very attractive. There was that sort of EM back to DM move, which I think has generally stopped. I think there's a sense that there's an absence of policy initiatives coming out of New Delhi, and of course all the stuff that we read about in the press over the last 4 or 5 months. So yes, it is slightly negative, but for the right opportunity, for the right valuation, and I think we're fast approaching a time with a 14 times multiple. From a long-term perspective, the market is starting to get very, very attractive. But again, whether you pick it today or whether you pick it in July, August, September, one can debate all day long. So fundamentally the story is good. I think the market is basically attractive, but will people be sort of chasing the indices over the next 2-3 months? I doubt it very much.
Why do you say that, Tarun?
I think there's just too much headwinds, right? And frankly, it's also the summer, right? So you've got the summer, you've got inflation, you've got just, a lot of negativity around. There's no reason to be chasing this market. And as I said at the start, there's a little bit of risk that you sort of see the market 5, 7, 8% down from here. And perhaps that's the time when people start to say, okay, this is getting really attractive, let's look at it. But as of now, there's really very little interest on the part of FIs.
Tarun, are there any segments in the market which seem attractively priced to you right now to sort of park your money in, maybe not just short term but medium term, post the earnings that we've seen? Anything that surprised you positively where you'd want to park some funds?
I think that typically the defensive, right, the sort of the consumer-led, the ITCs, the HULs of the world, perhaps some of the pharma names, all looking very attractive at these levels, and that's really what we've been advising our clients for the last 4 or 5 months. That's the sector to be in. Perhaps you're in the telecom space as well, because those have been beaten up. Those would be the 3 or 4 sectors. Really consumer-led would be the sectors that we're advising our clients to play with.
You have a cautious on metals and realty. There's no banks mentioned in there. Are you cautious on banks as well, or is that sort of a neutral stance for you right now?
The banks, we're generally neutral because obviously we think that rates are still headed up from here at least another 75 bips. So I think until you sort of start to see rates having peaked, inflation having peaked, that's when I think you start to see the bank stocks run. And we think perhaps that's a Q3, early Q4 event. We have been cautious on metals. Obviously there are 1 or 2 stocks that we really like, but generally as a sector we're cautious. And that has a lot to do with what we're seeing sort of in the global commodities cycle where you're in this sort of, I think personally, a short blip down. Fundamentally, commodities remains a good story. I think you'll start to see these things run in the next few months one more time. The froth in silver, for example, which has taken silver, which took silver up almost 100% in 3 or 4 months. I think those kind of frothy stories are over. I think we'll come back to, is the fundamental demand for commodities still there, for the natural resources commodity, for oil, for gas? I believe it's still there, and I think in the next few weeks you'll start to see commodities start running up again.
Right. Tarun, for somebody purely focused with stocks here in India, a local investor, what would you say would be the signs that you should actually then start to aggressively look at stocks? Would you want to see some capitulation-like behavior with foreign selling happening? Would that be a sign that the market is ripe for a big turn, or something else?
To my mind, seeing inflation peaking, or whatever the sense might be that inflation's actually peaked, will be the catalyst to take this market higher. It'll be the catalyst to bring the FIIs back. It'll be the catalyst to change the discount rate on your sort of, cash flows going forward. I think that, to me, will be the key catalyst to take this market higher. And I think if there's something that comes out of Delhi that would suggest that, and I'm sure they are very keen, but to actually get some of the the reforms passed and put through, I think that would also be another catalyst to take the market higher. But from a sort of numerical standpoint, call it, I think inflation numbers are the key.
Inflation numbers are the key. These reforms that you were talking about, anything specific? Or just broadly?
No, I think generally, I think we need to broadly. I think we all know, much has been tried, but I think it all needs to come through. Whether it's the capital markets, whether it's banking, whether it's the insurance, FDI changes, all that sort of stuff. I think sends positive signals to the FI investor, which I think they're all waiting to see play out. So that's really what I'm talking about.
All right, sure. Tarun, thanks very much for coming on board. Good to see you as always. Appreciate your time here on the show. Good having you with us. Take that break. Come back on the other side. We'll get back to the market, which is down about 60 odd points in the Nifty, and we'll get you some more managements. Come back in 2 minutes.